Hey everyone, John Henry from School of Trade. Today we're going to be taking a look at a wedge breakdown here on crude oil. Now, I have my entry short here looking in at 72, and the main reason behind that is we've seen this rising wedge working its way higher, nice ascending wedge, and then they blast through the highs right here. And the way that that kind of broke higher like that really kind of puts sort of the seal, the deal, if you will, on the fact that the buyers are just done, right? They used all of their energy to get up and then absolutely no follow through, and they come crashing back lower. Now, there were some buyers that tried taking that pullback, but in context, it's a really bad place to buy, and we start seeing this turn back around. Now, the reason I like this as a short right here at 72 is because we haven't hit those buyers' stops yet. Their stops are likely underneath that low, maybe a couple swings back on those lows, so I'm looking for a stop run move to kind of break this down aggressively lower to potentially push all the way down to this rising area of support. Let me zoom back a little bit here. We had these first two lows down here, and we can see lining those up, that would be a logical area for the sellers to want to try to get to. So the entry here at 72, stop is at 82, nice little 10 tick stop. The target is going to be down at these channel lows. Now, right now, the channel low is at 41, but you know, that will move as more and more price action forms. So, for now, we're looking at a beautiful risk reward on the trade. Everything is lining up very well. Now we just have to wait for the sellers to come in, knock these buyers out of the move, and get that drive lower that we're looking for down to around 40 to 50 or so would be a likely area by the time we get down there. Seeing sellers pushing, oh wow, all in one move, we get the target fill, beautiful. So we saw the sellers coming in very aggressively. They tried getting that bounce up right here, and that triggered in some buyers, and then it shut them down as well. That's why context is so important here, and why the buyers failed here, why the buyers failed there, etc. And we get our target down at these lows, and now we can see immediate bouncing because a lot of people are going to be taking profit here. This is a potential area that could turn the market around for a move right back up again. So this is a buying opportunity in the long term for buyers to begin scaling in, which is exactly why we want to be getting out of the move. So gorgeous drive lower here, did exactly what we were looking for. We had the buyers get trapped into the move and immediately shut down with a beautiful stop run lower. It even came back to try to get more people in, got some buyers in, and that was also a retest of where the sellers, or I'm sorry, the earlier buyers got whipped out for another re-entry if you took it. I didn't, driving that move right back down to those targets on the low. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.